Okay, welcome back to the show, guys. Happy New Year. Today is the 1st of January, 2024. Time now is 6:11 p.m. I wanted to make a video, which is a request from one of our members, Raymo, and another member requested to talk about pros and cons regarding stop losses, right? So he wanted me to show you how to do some stop losses. Ignore the camera. I'm not sure what's going on. Camera zooming in and out, so I don't know what's going on. Ignore that. But let me go into Binance and show you, because I obviously have some interesting stuff here. So while we're here, I just want to quickly show you guys. You need to be on the, so if you go to Binance, if you're doing it on the laptop or computer, you have to find this trade section and go to spot or whatever you want to go. But obviously we're doing spot right now. So I want to show you how the spot market trade works. Now, different exchanges have different functions. Binance has all of them, hence why I'm showing you Binance. But once you understand it here, you can actually use the same principles on other platforms, regardless which options they give you or not, right? So once you navigate yourself to the spot exchange, like any one of these pairs, so idea is you go for your pairs. I've selected BTC, for example, so it will take me to the chart. Once I'm in the chart, you need to familiarize yourself. Like, this is the order book on the left. This is your coins that you want to search, and we will search for a different coin instead of BTC here. And you can see the actual market trades right now. So for us, like, we are doing something to do with sell. So what we're going to do here is, like, if we're going to buy, for example, you can come here, you can see for buy, you need to make sure you have enough USDT, for example, whatever your pair is. And if you're doing a sell, you need BTC, and vice versa if you're doing the opposite, right? So these are the things you need to understand. So just to show you, coin I recently just bought. So you can see I've got a star on it. You can favorite your coins. It will show you your favorite bits and bobs. So again here, I'm currently sitting on SEI, and you can see that I do not have any cash to buy. However, I do have just a few say here to get rid of. And we talked about say a few weeks now. I mean, last video I can't remember if I mentioned it or not, but I think I did say that we are looking at 75 cents. And you can see we're currently sitting at about 72, 73 cents. So say is doing exactly what it needs to do. Again, there are many things, like, when we're doing charting, right? There are many things that we look at, and we can do these predictions and say, well, this is what's going to happen. That's what's going to happen based on certain things. But that's a lot more advanced level stuff, which I don't want to, I don't have the time to show you. And of course, if I did want to show you, it will take hours and hours. It's more of a hands-on thing to show, like, how do we predict, right? Because a lot of people say, well, hold on, you don't have a crystal ball. How are you making these predictions, especially for coins that are now on price discovery, or even before they come on price discovery, you're seeing these prices come up? How are you doing it? It's a whole other video. If you guys want me to do something like that, you have to let me know. Subscribe to the channel, hit that like button, leave something in the comment, and maybe I can come on and do a long extended video on TradingView. So we'll probably have to jump onto TradingView, for example, and look at the entire chart and do something where it shows you exactly how these targets are made, and how all these calculations are done, right? It's a pretty crazy one if I was going to show you. But anyway, let's stick around with Binance right now and show you what I'm talking about when we're doing stop losses, right? So we want to come here, and basically what you're looking at is stop limit, right? So that is technically your stop loss. Now on spot limit or stop loss, you can technically buy or you can sell, right? Of course, before we do this, we need to find our time frame. So this is a chart which is sitting on a weekly time frame, and you can see I've kind of selected the ones that I like to look at. But anyway, we don't want to be doing this on a weekly because it's a higher time frame. This candle doesn't close until Sunday, and today's Monday, so we have 7 days for this candle to close. It's not the time frame we want to be setting these stop losses up, right? We want to go into a shorter time frame, maybe a daily. But then we have to see on the daily, is it where we, is there something here that we can look at and find better data for us to start trading on, or setting up stop losses? Maybe not. So we might want to go even lower. So probably we want to go to a 6 hour, 8 hour. I prefer the 4 hourly because it breaks it down into 6 segments in the daytime, and it gives you like 2 trading sessions per region of the world, which is brilliant, right? So as you can see, it kind of shows you this with all the data, and I'll take you back to trading view just to kind of show you this, what I mean, right? So this is 4 hourly, and when I'm looking at this 4 hourly data, I'm seeing a whole different amount of data. I'm seeing where I might come and find my little support zones, where I might, well, I'm not showing you that here. I mean, if I was to show you, for example, where we are right now, if you just go down from here, even up to here, it's telling us we might even test out the 83. This is based on this current data we have right now. So we might even test 83. So what I'm going to do, I'm going to hold on a little bit. But as we're doing this stop loss, let's go in and let's have a look at this, right? So let's see. What we want to do is we're going to look at scenarios, right? So we're looking at a scenario and we're saying, right, market right now is pumping up here. Okay, the market is pumping up here. We have this many say here, but we want to protect our say. So we need to set up some sort of a stop loss, right? So, and a simple stop loss would be a stop limit order. So what we say is, okay, this is where we are, and this is one candle. So let's just zoom into this. Let me zoom as much as possible into this. So this is one candle, and we're looking at this on a 4 hourly timeline. We'll say, okay, this is one candle, and this is where we've got a lot of good data. Maybe we might find some support, right? But if we lose this candle, we want to sell out because the potential is we might come down, right? So what we want to do here is the target, what I'm looking at. So let me just get this and let me just put it here, for example. So this is where I'm saying, okay, this is an area where I don't want to fall below. So I want to start setting up my stop loss around this bottom area here. So I'm saying if it comes to about 65 cents, I want to exit, right? Or I want to start triggering my exit, right? So I'm saying, okay, this is the stop. So stop is your trigger, nothing more than that. So the price here I've got is 65.96. I'm just going to say 0.65. So 0.65. So this is basically my stop price. And I'm saying, right now, that's my stop price. I also need to put a limit to say when to sell, right? So I'm triggering the market and I'm saying, right, okay, sell around here. If we lose this area, say, for example, if we lose that wick there, I want to leave it and that wick there. I'm saying, okay, if we go to 63, I want you to sell, right? So I'm going to change my price here and say 63. So that's my limit. I'm telling the market 63, sell at that, but trigger at 65. So I'm saying activate 65, sell at 63, and the amount of coins I want to sell, and I'll show you the explanation how it works, right? So this is all I'm saying, and that's how much money I'm going to get back now. When you go here, you have the option, obviously, to sell. When you do that, it tells you you have triggered your stop at 65. So when the market comes down to 65, you want to get rid of it. The limit is 63. So that's the price that you want to sell at. However, if Binance, so the platform, finds a price in between 63 and 65, it will actually sell. So this is activation. If it finds a price around 64, it will sell. So if there is a buyer, it will sell. If not, then it will continue to 63 and it will sell at 63. So we know this is what's going to happen, right? So it's always going to be better than this price. Now, we always want to give a little bit more margin. So let's cancel this for a second, just to explain here what's going on. So the gap, when you look at this gap here, what you have to understand is the distance here. We need to also give, sorry, let me just get this here, right? We need to give Binance enough chance to basically make sure they can execute this price. So in this case, what I would do is I would grab this and I would actually take it down a little bit lower, probably even up to here. So to give them enough room, because what I'm looking at, what I'm saying is I need a good percentage for Binance to mess around with, right? So what I'm saying is, look, there's a 6% gap here. Now, it doesn't have to be 6%. You can be more tighter. I can probably bring it up here. But the idea is I want to give it enough space so Binance can activate here, has enough time to trigger the price and the sell order and sell before I get to here, right? So that's how I'm going to maximize my stop loss. So it's very simple, as you just saw. So we can do this change here as well. We can probably change it to 62. And again, same thing, we've given it enough room. So we're saying, look, there's enough room from here to here, sell all of it and get out. And of course, you won't sell anything until you get this confirmation. Does that make sense, right? So that's that. Now we want to move over to a little bit more powerful tool, right? So again, same chart, same everything. We want to go back here. This time we're going to take these away again. We want to do this all over again, right? And we're going to draw our lines one more time. Okay, so again, we're going to draw a line here. So we're going to say that's our first line. And I'm going to do this slightly different so you understand what's going on. I'm going to say this is my second line is here. Okay, so this is my second line. And I'll probably put a third line just for the sake of it, and I'll show you what I mean by the third line. So I'm going to say the third line is around here, looks a lot more stronger. I'm going to put it here, right? So we've got three lines. We've got the 65. Again, that's where we want to trigger. So we're saying this is our trigger point, and we'll show you the trigger here as well. We're saying this is where you start selling the price. But this line now is going to act slightly different because we're going to change certain things. So we go here again. This time, what we're doing is what's known as a trailing stop. So things are going to change now, right? And the trailing stop, we get one more function. So before we had limit, right? And this is the activation price, the price that we had before on the top. So it looks a bit different, but no, it's still the same thing. So before, when we had this stop, this is going to be our stop price now. So our stop price before was 65. And guys, I was going to do 3 videos, but I think on one video it explains it a lot better. So just break it down a little bit, right? So this is now our trigger price. We're saying 65 is our trigger price, which is this price here. Then what we're saying is we want our delta. So our delta is the difference, the percentage we want to trail, and I'm going to explain that to you in a bit, right? So what we're doing here, we're saying how many percentage is it from here to here, for example, right? So we're seeing, say, for example, on this one, we've got from here to here approximately 4%, right? So we're going to change that delta to 4%. So we're saying the difference we want to trail by is about 4%. So if it goes up, you continue up 4% all the time. And if it drops 4% at any given time, you sell, you trigger the market. So this is not an absolute. This trigger is not an absolute, right? This activation price is not an absolute. What it's saying is worst case scenario, and I'll explain that in a bit, is that we want to be selling at that. However, on the best case scenario, we want to start continuing to move up. So we're saying that's what it is. Now, limit. So we want to obviously trigger our limit, and our limit is going to be 62, right? So we want to say our limit is 62. That's the difference we want, and our limit price is going to be 62. Sorry, as you can see, I'm struggling to zoom in and out of all of this, right? So we're going to say 62, right? So this is what we're going to say. Now, I'll show you this here, for example, 62. So again, similar to the other one, we've got 65, 62. All of these are confirmed. Now is the magic. What I want to show you is the magic, right? The magic's right. So this is what you have to understand. So with the trailing stop, like earlier on when you saw the stop loss, it was basically as we move down, we want to get rid of it. We can use the stop buy to buy as well at those levels. We're not concerned. All we want to do is trailing stop. Now, trailing stop, what we're saying is if the market continues to pump and it goes, hold on, let me do this. It's going to be even better for you guys. Give me a sec. Right, let's get back into this. Zoom in a bit, get out here. Let's get the pen tool and I'll show you what I mean, right? So what we're saying is right now we're here. So market decides to pump up all the way up to here, right? Let's change this as well to 3 pixels for you, and let's make this to a yellow line, right? So you can see better. So imagine the market starts moving up. Now the market moves up, which is fine. What we're going to do at that time is basically make sure we are staying approximately 4%, right? Remember, in our case, it's 4%. So just say for here, 4%. But we're constantly trailing 4%. So our stop order that we had, that stop limit that we, activation price that we set up, is literally going to be trailing behind here. So at any given time, this thing decides to come and dump 4%. Immediately, it will activate the sell order and we're going to start selling. However, because of this, it doesn't mean we're going to do anything. It's going to start selling as we come down, okay, for a price better than this. So whatever the price it could find here, it's going to automatically activate. Within this gap, it's going to sell. But we're telling it the last minute, you cannot sell less than that. Now, KR asked about some pros and cons, and I want to talk about some pros and cons here, right? Because we do have some interesting pros and cons here, right? Also, I want to show you one more, and then we're going to do some pros and cons here. And I think pros and cons will cover the entire thing here when we talk about it. So let's get back into the next one. I hope you understood that one. Again, guys, if you don't understand it, I'll probably have to do a video and break them down one by one for some of you guys. I know I'll probably have to because again, a lot of you guys may not understand what I'm trying to say here. But that's what trailing stop is. Trailing stop would give you, just imagine this delta and use the word trailing stop. So you're trailing by 4%. And it's always going to, this limit order or this entire activation trigger is going to be following along 4% the entire time as you go up. So the moment it drops is the moment that it decides to sell for you. Does that make sense, right? So that's very simple. It's actually quite simple to understand. Trailing by 4%, that's it. Or whatever percent you put, it doesn't matter. That's when it's going to activate and sell. Next one. This is an interesting one. One cancels the other, right? So one cancels the other, right? So this one's quite interesting. Now, this one has pretty much all the functions of trailing stop and a stop loss. However, this also has what's known as a take profit, right? So this is quite interesting. So we can say when to sell, right? So we say, okay, let's sell this particular asset at the price of, I'm going to say in this case, just to be safe, 9.5. Now, one thing this doesn't do, and I want to confirm this as well, guys. When you do a stop limit, you will get a confirmation tab. When you do a trailing stop, you'll get a confirmation tab. However, when you do an on Binance, when you do one cancels the other, you do not get a confirmation tab, which means if I press sell, at that time, it will place two orders here, one for profit and one for loss. And if one of them fails, the other one will cancel. We're saying sell at a profit. So we're saying we're going to sell at 95 cents. However, if the market starts to come down a little bit from wherever we want to say, let's create a trigger and say, let's stop. We want to stop this at a different level, right? So we're saying, right, if we come back to about 65 cents, we want to stop 65 cents. So we say 0.65. So we're going to stop out at 65 cents. This is, remember, it's not a trailing stop. It's just one is to take profit and one is to stop loss. So limit here, we say 62 again, just like before. You see where I'm going with this whole 62 things. We're saying 65 is the trigger. The price is 95. So if we continuously pump, we want to sell for 95. If we don't pump and we start dumping, we want to start selling at 65. And then obviously we want to dump no less than 62, like price-wise, we don't want to sell any less than 62. That's our limit. And we want to be doing all of our amounts, all right, whatever the amount is, whatever coins we have, we want to sell all of them, say 100%, we want to sell them, whatever. And this is the rules we want to follow. So the rule is, if we go up 90 to 95 cents, exit me, sell me out, take profit. But if we start dumping, then we want to sell. Again, you probably notice that I'm keeping this quite tight. I'm keeping this within that 3-4% mark because we don't want to go too far, right? Whatever we do, we don't want to go too far, because if we go too far, and this is the con that I want to talk about, and I'm going to move over from these charts because I don't like these charts, by the way, guys. So I'm going to move over to TradingView and just show you on TradingView what I mean by that, right? So let's get rid of all of this. Yeah, let's get rid of all of this, right? So here we're just going to do a simple thing here, a few lines here and there. I've got my custom setup, so I'm a lot more happier, right? So I'm going to use a Fibonacci as well. Let's do everything as it is. We're going to show you what we're seeing on the chart, and we're going to talk about it that way. So it's so much more easier, right? So we know that's one of the prices that we're looking at. So that's our top high price. And then of course we've got a low price, and this is how we want to look at this. So we're saying this is where we want to trigger. So bottom of this candle is where we want to trigger, and we want to be, we want our stop loss to activate around here, right? So this 62 cents here, we want to activate. And of course, we also want to do one more thing. We want to be able to buy. So probably in our case, we don't need to even look here. We might want to buy somewhere around here. So we're now going to activate a few things here, right? And I want you to all to observe these prices and understand what all of these mean. So in the case of the one cancels the other, what we've done is we've said, if the price goes to around here, it says 86 cents, just say the other one was 95 cents. If it goes to our Fibonacci 1618, we want to get rid of it, we want to sell it and exit. However, if the market, for whatever reason, decides to go down today and start coming down, I should have changed the color for you to yellow so you can see, right? So the market starts coming down for whatever reason, then we also need to start activating our triggers. So what we say is, okay, when when the price starts coming down, we want to activate our trigger around here, right? So this is the trigger point. We want to activate, this is the activation. And then we want to sell between this price here, So we don't want to go any lower. Now, the con, this is the con. If this area here is not set up in a tight manner or even slightly loose, you don't give it enough space, what's going to happen is when the market dumps, let's do another drawing. When the market dumps, it will cross through and go over, and your order will not be filled. So if your limit order doesn't get filled and the market continues to go down, so let's move a little bit to the right again, and it continues to go down and say it crosses over all of this, what the con is when the market recovers again, your order, because it's still open, it triggers and it sells around these areas here. And obviously on the upside, you don't want to be doing that. So if you do set up limit orders or stop limit orders, especially, what you ideally need to do is obviously set up some alerts as well, if you can. And the alerts would help you, because what you're saying is, look, if I come to this price and I miss it, I want to know that my price has been activated. If it hasn't and it's fallen through and I haven't sold out, then obviously you don't want to be selling anymore if the market's recovering again. So that's the con that you have. The pro is it will all do everything for you automatically, provided you use some alerts. So for example, if I go here and I say, right, I want an alert here. I want to know what's going on, what the price is. I want alert me when the price is, for example, 87 in that case, or 86 is saying, right? So alert me when it gets to 86, right? Only this once. Expiration date, put it whatever, doesn't matter, alert name. Let me know when this particular thing happens. It will tell you. Okay, it's very simple. You can do it here or on your exchanges. Set up an alert to tell you what happens when the price is crossing over, right? You know, you can see it crossing up, crossing down, less than, move up, whatever. Many things can be done here. Set your alerts up so that way, if you are having trailing stops, and when you're coming down, if your order has not been filled, or your limit order, or whatever numbers you've put in, remember, when we're coming back here, I hate this. When we're coming back here, if our order is not filled, right, or we haven't reached that and we're reversing back down now, I need this price to activate and this price to sell, or anything in between that, but not below this. Because when it goes below this and my order hasn't sold, this clearly means that I'm just stuck there. Now I'm going to be hit on the way up, which I don't want to do. So that's just something you have to keep an eye on, right? Now, trailing stop. So we're going to do a trailing stop one right now. So another scenario, say for example, we're right here right now, and we've got the same orders. In fact, this is the only one we're not going to talk about right now. Actually, I'm going to leave it there for a second. What we're going to do is we're going to talk about a trailing stop. So we are right now here and we're saying we're going to trail by about 4%. The market goes blitzing fast, it goes up, and then it comes down by say 4%, right? So everything is good. So far, so good. We have been pumping, we've gone up, market comes down by 4%, just for the sake of this video, right? And let's just say from here to here, let's put one down here and say 4% is around here, right? So 4% is around here. So what we're saying is, as soon as 4% activates, the trigger will activate. Once the trigger is activated, it will now start to sell. It would now decide to sell from, say, from here. It would decide to sell anything up to the level that we put as our stop price. So remember, this line here was our limit order. So we're saying from here to here, find a space and quickly sell us out. Now, if we don't use an activation price, Binance will automatically activate for you, but when you want more control, you use the activation price. So hence why we have an activation price here, but that price is irrelevant on a trailing stop, because remember, we've already activated it 4% below, because that was our price delta. So once that price delta has been activated, it is automatically now seeking to sell all your assets or whatever it can by the time you get down here. Okay, so that's why we've given it enough room to do this. And the room is this: your price delta, the percentage, must never be more. So this, for example, and what I mean by that, let's just draw it and show you. So just for the sake of this, right, let's just say my price delta is more than these two lines, my price will never activate. Okay, this price will never activate. But if I stay within this range, then I've given it enough room for it to activate and to sell. So these are the things you need to be careful about, right? And stop loss, obviously, I don't need to explain a stop loss. But what I do want to talk about, and that's the reason why we've got the other line. Let's get rid of this, right? So we got one other line here that I want to talk about, right? Again, you probably noticed how I did everything on the Fibonacci, but this is a line I've got on. Now, on the reverse of everything, and this one I don't want to show you on Binance or anything, right? On the reverse of everything, just for the sake of it, we now have some UST, US dollars or USDC or whatever sitting on an exchange, right? We have it all sitting on an exchange ready to deploy. Well, your stop limit or your stop order or your trailing stop can also be used to do the opposite, to do a buy. So what you can do is say, right, market's down here, but buy here. You can set up an order to buy. So instead of saying stop limit, you say stop limit to buy. So you start a trigger, you say, right, I've got all of these USDT sitting around waiting here, for example. For the sake of it, I've got 100, right? I've got $100 sitting here, right? $100 sitting here. That's all we're talking about. And I want to deploy that, but I don't want to deploy it when the price is up here. I want to actually deploy it when the price is somewhere down here. So what I do is I say I want to trigger when the price is here. So this is my trigger price. So I'm saying trigger when we hit this 65, right? So this is my activation price. However, my limit is, say, for example, here, I want to buy here. So now I've triggered it. It will actually start to look for a good position to buy around the area. It doesn't mean it would specifically buy at 56. It will buy 56 or better. So, sorry, 65 or better. So we're saying from here to here, whatever price you have available, if there's orders available, people are trying to dump and you have an opportunity, you go in and you buy that. So it's a bit extensive, this video, I know, maybe confused a few people here and there. But I hope it kind of makes sense. I was going to do 3 videos and I just don't have the time to do 3. Stop limits are very powerful, all right? Your trailing stops are very powerful. Only one thing you need to make sure you understand is many exchanges do not have all of these functions like you just saw now on Binance. They have other ways of doing it. So for example, KuCoin may not have all of them. They do actually, but they may, I'm just saying for the sake of the video, they may not. If they don't, see what they have and utilize that. These are very powerful tools, especially for automation, especially for us humans. We need to sleep, right? We need to sometimes move away from the computer. What do we do then? We can't be sitting around observing the market entire time. So sometimes we need to auto sell, auto buy. And when we say auto sell, auto buy, we're literally talking about limit orders, trailing stops, stop losses, all sorts, right? Trailing stop has been one of the most powerful tools I've ever had. It's just been brilliant. As long as the market's pumping, it continues. It doesn't care. It continues. Yes, it stops me out when the market dips by 4 or 5%, but at least I've made the maximum and I've kept my profit. That's the key here. The key here is all about keeping your profit. I want to talk about something, guys. So the market itself, right? The entire market itself, last couple of weeks has been looking very bad, right? And I want to show you what I mean, right? If I activate this and I'll go to weekly, I just want to show you something, right? So market on the weekly, right? This is the total market, you can see, has been pretty deadly, right? Pretty deadly because we've peaked out here, right? We've gone above here. This is like the danger zone. You can see every time we've hit those areas, you know, like this, I'll show you, you know, just go back a little bit more. You can see, for example, we've had this area here, June 2019, this area here, February 2020, area here, January 21. Let's go this one here, November 21. And you can see what these things signify, right? And then we've had one here. I'm not even looking at these ones, right? And I'll tell you why I'm not looking at these ones. When we've had here, for example, April 2023, and this is where we are right now. Now, why didn't I look at these ones? Because I believe this is this point. Every cycle, when we've had a nice pump, we can see this dump, pump. We haven't had that yet, right? And even if, everything looks like it, but I don't know why. When I'm looking at this and when I'm looking at these areas here, this yellow line here, it tells me something else as well. So right now, yes, we're creeping up, everything looks good, but guys, you know, we need to be a bit cautious. We need to be a bit cautious. That's what I'm saying. So that's what's been worrying me a little bit from where we are. However, and this is where the blue line comes in, the blue line has started to point back up again, which means the blue line is showing me the same sign as this area here and telling me now it wants to move up again. So the bull market isn't over, which was something that was worrying for me, especially when we hit this level on the yellow line, the RSI line. So now that the stochastic RSI is pointing upwards, the yellow lines come back and reset a little bit of breathing room, not too much. This is still a very dangerous zone. It is indicating the bull market wants to push forward and continue for a little bit longer, right? And we can see this here on this MACD as well. You can see how we are pumping up and we are quite, you know, in a dangerous area. If this thing flips back down, this yellow line comes back down, we are definitely in a danger zone. I would exit. But until the yellow line crosses this red line, I will be absolutely fine. I wouldn't complain too much about it. So that's what I'm looking at on the higher timelines. And it doesn't matter if you look at BTC or total market cap, they both kind of correlated. They both kind of look same, and I'll show you what I mean by that. You know, this is the total market cap. You can have a look at the pattern here, and then when I flip over to BTC, almost the exact same pattern, right? When you look at the candles. And BTC, you're seeing something different here because I have been kind of busy doing all sorts of crazy stuff, right? I'll explain to you what I mean. So remember, I drew a line around this 37K. And then I drew a box here, and we talked about where we are right now. And you can see we are trying to reach above, right? We are trying to reach above, get out of this particular zone. But obviously this zone is a little bit larger now because of this area here, because this has now become our minor resistance. I wouldn't call it a major resistance. But one of the crazy things I want to show you here, if I take the drawings off, is this pennant. So we've had this bullish pennant form here where we've done this pattern and then we broke out. This isn't really considered a pennant. However, it does have an upward trend line, which is good, right? An upward trend line is good. However, we do have this parallel lines where I am a little bit worried because we do have to get above these levels here for us to start becoming bullish. Until then, there's nothing to see. But what we saw on the weekly, remember what we saw on the weekly where we are right now, right? Everything's been moving back up again, and it looks like we are definitely, and I'm talking about this area here, that it wants to pump up. If that's the case, it wants to pump up, then the next resistance is this $48,000 level. And we do have a target now, right? Funnily, we actually have a target, and I'll show you the target here. Drawn here, the target now is $49,000, right? So for the BTC, we've got $49,000. So I am looking forward to this. Everything's looking positive. Obviously, listen, guys, you know, just by being positive doesn't mean anything. Just by me being bullish doesn't mean anything. Market could change at any time. Now, when it comes to coins like this, I've talked about it quite a bit, and I've made significant profits on it. You can see we also had a bullish pennant, and we did have a target. We beat those targets. I'm just waiting for the next pattern to form. Once the next pattern forms, I'll be ready to go. And what I want to show you is 75, how I got to that 75. I think that's quite important for you guys to see. So we were down here, somewhere down here, and I was looking at this area, and I went to the bottom of the market, and I said, right, if we come to here, what was it? I think it was around here somewhere. So around here somewhere, right? I looked at that, and it flashed like 68 something, and this is based on this particular level here. Then when I moved it up a little bit, and we were somewhere around that level here, I think it was this level somewhere, I think it was here somewhere, I got that 75. So all I'm doing is just adjusting my Fibonacci's from the bottom of the market to the top, and doesn't matter where I put it, whether I put it here, I mean, we've beat those targets. So all I'm doing, I'm just using these bottom areas. Obviously today I've got to use something different, so I want to use that one. And the bottom of my range now is pretty much around here, I would say. So that gives me about 89 cents, right? These are not set in stone. That's what you have to understand. These numbers are not set in stone. But the point is when we look at them, we can use them to make a rational projection, right? I wouldn't call it a prediction, a projection of what the market could do. Again, looking at the entire market. So we don't just look at one coin and then say, oh, this is going to happen or that's going to happen. We're looking at the greater market. We're looking at everything here, and we're seeing how is everything else performing. If everything else is performing okay, then these coins also have a good chance. And this is one coin that I identified out of all of these coins, all right? And you can see this is my regular trading list that does the best performance this season, has done the best performance. Now, somebody mentioned something, I think it was KR. Let me just go and check my message. He did mention something on Discord, I believe. He mentioned something about Arbitrum. And who was the Crow, crypto.com, right? So let me go and find Crow and crypto.com. What is it? Where's Crow? Crow, right? Crow today is not up yet. It's about 9 cents. True. Now, coins like Crow, Binance, and all of that, I talked about this. Until the exchange announces something crazy, until people start doing some nutty stuff on the exchange, they won't pump. KuCoin has pumped the best this season, in my opinion. So did Huobi, or their coin HT token, Bitfinex. Their one also pumped as well. Bitfinex, I think they have Leo token or whatever. Now, all of these coins has pumped, but Crow hasn't. Why? We haven't heard anything from Crow. We need to hear some sort of an action where there's use case for these coins, whether it be for some accounts or whatever, staking, whatever, it doesn't matter. Crow needs to make those moves. Because since Crow has launched the blockchain, and since they did that Matt Damon advert, they haven't really done anything. That's why we haven't moved. So Crow, I do still own a whole bunch of them. Whether they're going to move or not, I don't know. I'm hoping they do. But they might be a late bloomer. We don't know, right? We need to find out and see what's going on. Now, I was talking about up there with Arb and optimism. Listen, Arbitrum optimism, what you've got to understand is quite different, right? Crow tried to make their own blockchain, and they never wanted to do a scaling 2 solution or anything for Ethereum. That's not part of their game. Crow is Crow. Crow uses Kronos as part of their structure, coin structure. So they have nothing to do with Ethereum. They're trying to build their own thing and branch out completely. When it came to Arbitrum and optimism, yes, they have their own token, which they airdrop to people and whatnot. But they are part of Ethereum. They're part of Ethereum's highway to speed up things and make things cheaper. So you can't do much on Arbitrum and Optimism without paying gas fees in their version of Ethereum. So for that reason, they are still part of Ethereum. Now, many people are annoyed with Ethereum and their gas fees. And I'll give you a good example. I did a smart contract the other day. I was messing around on remix.ethereum, and I wanted to deploy this particular contract. And I went on Ethereum, and I'm doing a test, by the way. I'm just doing a test. On Ethereum, it was like $80 at that time. So I jumped over to Arbitrum. It was about 50 cents. I jumped over to Optimism. It was about 36 cents. I jumped over to Base. It was like 10 cents. So just look at that. Now, Crow, I can't remember what it was. I did flip over through Crow as well, but it didn't ask me for Ethereum. It asked me for Crow. So that's how we can identify like some of these projects where they are they part of Ethereum? Or are they not part of Ethereum? Does that make sense? So yeah, that's that. Other than that, like, look, what else is to talk about? I mean, I did say I was going to do a live. In fact, I'll probably still do a live if people want. But yeah, there's just some coins you just can't fail, guys. You just can't fail. Do you know what I mean? I wanted to show you this on Say because I am going to go and do a whole bunch of stuff on Say. So this particular batch of Say you just saw, I just picked up. I'm in profit right now. Picked it up around 54 cents. Pumped to 70. It's currently showing at 70 cents. I'm happy with that. So I might just take profits right now. I'm not even bothered about setting up a trading stop or anything like this. Take some profit, get out. I've made my percentage, move on, or wait for the bottom and buy again. Do you know what I mean? So one or the other, whatever I do, I do. Other than that, I'm off. My battery's about to run out. So what I'm going to do is catch you guys on another one. If you do want a live, you've got to let me know, guys. If you don't, then there's nothing I could do about that. I hope the video is informative. Have a good new year, and I hope you learned something from this video. If you haven't, get back to me, let me know. I'll do my best to help you guys out. But other than that, like, share, subscribe, and I'm going to catch you on another one very soon. Adios, my amigos.